Move on and talk about a company, and we kind of mentioned it here, a Planet Hollywood, or no, Planet Fitness, symbol PLNT. They're in the leisure industry. Kind of surprised, 10% short on the float. That's a little bit on the high side here. We do have a PE ratio of 30 versus 46.7. Price to sales 5 versus 2.3. That's above the industry, not good. You want these below. No price to book value. So that means there's no value left if you take away all the liabilities from the company. That's not good. Price of cash flow 15.7, slightly above the industry at 13.1, and they do have a good PEG ratio of 1.0, so a good PEG ratio, which says what you're paying for the future growth of the earnings. Now, the earnings over last year for Planet Fitness did look very good. They were up 31% when the industry was down 37.5%. I think that leisure industry is pretty big, so it's not just health clubs or fitness centers or many other things in there as well. Sales for Planet Fitness were up 12.1%, double the industry, up 6.2%. The analysts seem to love this going forward, Jace. A 5-year earnings per share growth estimate from the analysts on the earnings, 24%. Wow, that's pretty phenomenal compared to a loss of 0.6% in the industry. We do also see that they do, unfortunately, not pay a dividend. The balance sheet current ratio 2.1 versus 2.5. There's no debt to equity because there's no equity, so that you got to really look at the debt and kind of decide if that's worth it or not. They do have a high intangible assets, 32% versus 15%. Net profit margin, very good, 16.6 versus 4.3. Return on equity, well, again, negative 45.4% because there is no equity. Return on invested capital, 13.5. Free cash flow is $255 million, below the industry at $659 million. So I'm kind of getting mixed things here. What do we see going forward?
And I did look at the balance sheet too, real quick, just because I was curious on the fact that I'm assuming they rent out a lot of their space. I know the one on Highway Road.
Are they a franchise? I wanted to.
I don't know if they're a franchise, but
that'd be a difference.
Yeah, the concern I have is, I generally look at leases, but they have total liabilities of about $3.5 billion. Capital leases, when you look at short-term and long-term, it's really only about $460 billion. The long-term debt is about $2.45 billion, and if you add the current portion of long-term debt, that's another $23 million. So you're almost at $2.5 billion in debt for this business, which could be a big problem. Looking forward, let me start with the current price. Jumping ahead of myself here. Current price for Planet Fitness, again, their ticker symbol is PLNT. It's $78.66. 52-week range. Wow, the low here, $77.01. So right near that. And the 52-week high, $114.47. Year to date, the stock is down about 28%. Over the last 5 years, the stock, you're down about 8%. You go over the last 10 years, though, wow, the stock's up 435%. So it's done well over that time period. Going forward, though, for the business, I go out to December 2027. This is a disappointment. Estimated earnings per share here, $4.09. Gives you a target sell price of just $67.89. Kind of surprised by this. Looking for earnings growth this year of 10%, and then about 21% earnings growth next year. Curious how this company is continuing to grow. I'm assuming by opening new memberships is the plan.
And
storefronts.
Storefronts, yeah. And I did look at it. They are a major franchise. It says that 90 to 95% of locations are owned and operated by franchisees. As of late 2025, it's one of the largest fitness franchises in the world with over 2,700 locations. The investment, you want to take a guess what it takes to get a Planet Fitness?
$1 million.
You're a little bit low. $1.5 million on the low side. On the high side, $5.1 million. You got to sell a lot of memberships to make that up.
Yeah, no, that's pretty crazy. I a lot of times I don't understand the franchise model. The franchisee in my mind doesn't win a lot of times. It's the franchise company that really wins. I mean, Planet Fitness, they love getting franchisees because they don't really have to do anything. No, just collect the fee revenue there.
And many times people don't know this, but they require, okay, so if we have cups or we have something that have our logo on it, you got to buy our cups. You can't buy your own cups. So, I mean, they kind of get that franchisee locked in on things, and it's just like maybe it is good. We never buy a franchisee a franchise or company because of the balance sheet never looks good, but they really have a big advantage. And unfortunately, the franchisees have a terrible advantage.
I mean, they have to do all the operations. They generally have to take on a lot of the employment risk. I mean, there's a lot of problems there. So, I mean, Planet Fitness, I don't think I would take one as a franchisee, and I'm not going to take the stock either.
No.